covers mainly two sections: consolidated balance sheet or consolidated statement of financial position, and consolidated profit and loss account or consolidated income statement. Here, to study this, IFRS has came up with these 3 or 4 standards. IFRS 3, the IFRS 3 name is business combination. And then IFRS 10 consolidated consolidated financial statements, and IFRS 11 and IFRS 13 fair value measurements. So these 4 standards that you need to have a certain amount of knowledge at F3 level. They actually very huge standards, so many complicated discussions which we will not do it here. But some bits and pieces we will pick it for our F3 syllabus purpose. Plus IAS 27 and IAS 28. IAS 27 is separate financial statements. That's IAS 27. And this one, accounting for so these 5 standards that we will be 4 plus 6 standards we will be using in our discussion. So this is about standards. Then we need to understand a group. What you mean by a group is 2 or more entities. 2 or more entities carrying out business together. 2 or more entities carrying on business together. Let's say you have a company called A, and then you have a company called B. But company A has done A purchased A purchased 100% of the shares of B. So who will be the owner of company B? The owner of company B will be A. In this situation, what do you think? think who controls company B? A has the control. I will write within the cut full control of company B. A has the full control of company B. In this case, we name A as a parent. How do you name A? Parent. And B we name as subsidiary. So when you see somewhere a parent company, subsidiary company, you should automatically understand the subsidiary company is controlled by. I will not use the word owned by, I will use the word controlled by. Parent company, which is A. So, now A, so this is the parent, 100% ownership, and this is the subsidiary, and this together we call, name it group. So you have a parent company, you have a subsidiary company, and together we call it group. This parent company A can have several P, Q, R, S companies as their subsidiaries. Now, this they can have 100%. This they can have 60%. This they can have 55%. Or this they can have 70%. It doesn't mean, it is not necessary that you should have 100% ownership to secure the control.
But more than 50%.
Yeah, I'm coming there. So, majority of the voting rights. Now we talk about control. What do you mean by control? Now, for the company A to secure the control of company P, Q, R and S, the company A must have something called majority of the voting rights. What do you understand by that? Let's say company here, company R board of directors. Let's say company R board of directors total 10 people are there. Based on this situation, of the 10 people, minimum how many people would be from company A? What do you think?
At least 6.
Minimum around 6. So that means all of the decision making, any of the financial and operating policy, that's how the wording comes in. The decision that the board gathers and they make decision for the business. So the main the decision comes for two things: financial and operating decision making of the any given company. When the other company has the majority of the voting rights on that, then we call it that company has the control over. Clear? So, how I define control? When the parent company has the majority of the voting rights of any given subsidiary company, then that company has the control. If I twist the question now, in the same board, 10 people, if A has only 4 directors there, still could A having the control or not? It is possible. It is not necessary that you should have the voting rights in terms of percentage. Now let's say Qatar Petroleum signing up an agreement with North Oil Qatar. North Oil Qatar is a local Qatari company or a foreign company? It's a foreign company. The investments are actually from Denmark. So, when the Qatar Petroleum signing up this agreement, the investment, what do you think? Who is making the investment of this business? That Danish, whatever the company is, before the name is Maersk Oil. The name of the previous name is Maersk Oil. So they are the one who will bring money to run the business in Qatar. But what do you think? Who will have the power and control? Qatar Petroleum will have the power and control. They will say that, my friend, we don't care, you bring money or you don't bring money. You should behave according to our terms. So again, then if you ask the question, who has the voting rights, who has the control of this North Oil Qatar? It's not the Danish company, it is the local Qatar Petroleum. So, first point, now what we need to understand is that if I have a company, let's say I have a company X, and this company X has two owners, A and B. A has invested 60% of the capital. B has invested 40% of the capital. In the absence of any other information, in a normal circumstances, A will become the majority shareholder and A will have the control. But if there are additional information, like although the voting rights or the investments are less, yet the B has the power to control the finance and operating decision making, then B will become the controller. So to decide who is the parent for this company X?
B.
Either A or B. So to decide that, you should verify these points. So what is the matter, what is important here? The okay, so based on who will have the control, they will become the parent, and based on who is being controlled, they will become subsidiary. Is that clear?
What are the local terms we are using for subsidiaries?
Subsidiary, we here in Doha, subsidiary also used. Sometimes branches. But the term is not very clear. Joint venture,
Sister company also.
sister company, like that. So no. You see here, shareholders of Ocean PLC, and they have W, R, and S. 100, 80, and here you see 30. Now I have 30 here, then without any other information, just by seeing this, then O cannot control this. But if I put a different scenario here, now O and S. What is the percentage of O is having? 30. So what is the remaining percentage of the share capital?
7.
If that 70% is owned by 7 people into 10%. See, the total number of shareholders, how many?
110.
No. Number of shareholders.
8.
8 shareholders. The 7 shareholders, each of them having only
10%.
10%. But this O is having how much?
30%.
So now who will have the power?
All.
That's what I am trying to say. It is not always necessary that you should have measured more than, he used the word 50%. That's the cutoff line. Now, I will give you a table, a line like this. Here 0. And here 100. And up to 21 border, then 50 another border, then 100. Any investment, like for example, company O is investing on S and that investment falls here, for example. We call it, this region, we call it ordinary investment. Like, let's say, Qatar Airways. Me, I purchased, let's say, 1,000 shares. How I will be named from the Qatar Airways books? I am a shareholder. Correct? My ownership percentage falls where 0 to 20. So, I also have the proud to say that I am also owner of the company. But I cannot talk about all this. My type of investment, we call it ordinary investment. For this, we have separate accounting standards. Remember, this is not in our sense. So don't worry about it. Okay? So later, inshallah, when we talk about F7, we will discuss that in details. Next subject of F3, elder brother, F7. Where we will talk in detail about. After that, I have the next border now. Next cutoff line, 20 to 50. In mathematical equation, 20 to 50, my equation we call it associate. If see here, in this example, in normal circumstances, my investment is 30%. 30% is above 20 and below 50. So in this range, normally you name this company as an associate. Now who is associate? Is it O or S? O. No. S is associate. O is always the investor company. You call it the parent company. Depending on the relationship, you decide whether ordinary investment or associate or subsidiary. Understood? So, this one normally will become associate unless they give you information to say that O has the majority of voting rights or have the power and control to make the decisions on finance and operating policy. Like for example, changing the price of a product. Now, in a board meeting, discussions going on. We need to increase by 20%, 15%, 12%. Now, whose opinion will be finally taken? Then they become the parent, and then they have the control. In that case, although it is 30%, S will become subsidiary. Okay, now this range here, IAS 28, and this range we call it subsidiary. For that only I wrote all that standards: IFRS 3, 10, 11, and 13. IAS 27. I will not write 28 because 28 is. So this region we call it what? Now suppose now here in this example, see these two companies, 80 and 100. Now these two companies are falling into which range? The 100, this border, 150 to 100. Then you could name them subsidiary. Is that clear? Okay. So, define control, and then control has these three things. If you say that you have the control, you have the power to direct relevant activities. You are like a Hitler. You have the power to voting rights. Now, every time when a new decision coming in, there is a poll. People need to vote. And who will decide? They will decide. So if I have the control, I will say, okay, I am going to vote, not you. You cannot do this. This is my decision. Now, shut your mouth. Get up. So you can do that. So that's number one. Number two, right to appoint, reassign or remove key management personnel. Let's say on 1st of April 2022, a company purchased another company. They invested, let's say 60%. Now, on the month of May, there is a board meeting. So this board meeting, the investors also will come. And they see that there are some old other board members are there. They have the power to say that, my friend, can you get out? Clear? If I bring an example, FBQ. FBQ is Faisal bin Qasim. Recently, CEO and CFO been changed. Two Qatari gentlemen they brought. So these two Qatari gentlemen actually, the one is son of Mr. Faisal. I hope everyone knows Mr. Faisal, right? Faisal Qasim, yes. Faisal Qasim. One of, I think he's the Qasim brother for Sheikh, his father. So he's one of the largest majority investor, rich man, all that.
Al Faisal Holdings.
Al Faisal Holdings, yes. City Center, anything you name that belong to him, mostly. So then before the CFO was one Egyptian gentleman. Now, father what he did, he introduced one of his sons as the CEO, and then he brought another person as the CEO. So then that's how it is. So you have, when you have such power, you could do this. And then also, right to appoint or remove another entity that directs relevant activities. Let's say, for example, the company B is outsourcing IT services to X. Now this company comes and says that, okay, no, I am not happy with X, I will bring Y. You will do that. So, these are some examples. Selling and purchasing goods, selecting, acquiring, disposing of assets, researching, developing new products, determining funding structure and obtaining funds. Then the second one, exposure or right to variable returns, the profits. They have the right to receive the dividends. And they also have the right to receive interest from any investment that they make as a loan. And the changes in value of investment that they can decide, okay, 1 million I invest, I will remove 200,000. No, I will put another 500,000. So that is that. Remuneration of servicing interest assets or liabilities. Investees, assets or liabilities. You decide that. And I am managing that, so I will take a salary. The last one, fees or exposure to loss from providing credit or liquidity support. Now let's say subsidiary is needing a 500,000 to do some LC or something. So you give the money and then you send a charge saying that this is a service charge. And tax benefits. It's when you do the consolidation, there is a tax advantage coming. You will learn inshallah in the next class. I mean next level. Yeah, and the excess to future liquidity, returns not available to other interest holders, example, cost savings. So that's a synergy will work. You combine, so some cost you can manage it. And the third one, ability to use power to affect the amount of return. So you have to rewrite this. Control is the power to direct relevant activities which has exposure or right to variable returns, and ability to use power to affect the amount of returns. That's how the definition is. So that has three different layers. Associate. I just told you. Associate is investment between 20 to 50. Here, there is something called significant interest. Influence. Significant influence. It's like this. now a board meeting of a company, I can come, I can sit, but I will keep my confidence. Or just see what's happening. And then just have to say all okay. Yes, sir, naam maafi mushkil. That level of power. You are just invited to sit there. And sometimes they will listen to your comments. But they will not accept your suggestions for final decision. So that is what the significant is. So these are the representation in the board, participation in policy making, material transactions, purchase and sales, and then interchange of managerial personnel, provision of essential technical support. So can we try this question?